We're talking about the economy. There's a lot going on with it. We know investors are meeting in Jackson Hole, Wyoming right now.
Right.
On Wednesday, they'll be getting a really big, important update about inflation for these investors. And joining us right now, we have Jared Pincin with Cedarville University. He's an associate professor of economics. Thank you so much for joining us today. We appreciate it.
Thank you for having me.
Okay, so there's a lot happening with the economy right now. So big picture, why are we watching this week so closely?
Well, we're watching because the new Fed chairman is giving quite a large address at Jackson Hole. It's a yearly address, but there's a lot of questions as to what the Federal Reserve is doing. The new Fed chairman wants the market itself to do monetary policy more than the Fed. So what I mean by that is before the last couple of Fed chairmen, they've used forward guidance telling the market where the Fed is moving. And this particular Fed chairman is almost doing the opposite. He's allowing the market to either tighten or loosen on its own and then adjusting monetary policy from there.
And inflation, when we look at those numbers, is still running higher than the Federal Reserve would like it to be. Does this week's PCE report tell us anything about what we could see trending in the future?
Well, you're right that inflation has been running higher, and it's been fascinating to watch that the Federal Reserve hasn't really taken steps to push the inflation rate down towards their 2% target. They've been very comfortable over the last several years of running it, letting it run between 2.5% or higher. So this week, the idea of what's going on at Jackson Hole and any inflation numbers coming out before the Fed next meets in September will give us information as to where they are, what they are thinking, and where they think interest rates will go. So I'm not sure what he'll say, but everyone will be watching.
And I guess the other big thing too is like we look at the inflation numbers, but for the average Joe out there who is looking to make a purchase, whether that be to buy a house or even just pay down credit card debt, the numbers that are tied to interest rates are also something that people have kept an eye on. Do we expect to see any indication of what we could see happen with the overall interest rates?
Well, it appears that the Federal Reserve is taking very seriously where inflation is going at this point. I don't think they have been, to be honest, the last several years. But it looks like they're comfortable with keeping interest rates higher, which means that we should not expect any sort of large reduction in, say, the 30-year rate that you would pay for a fixed-year mortgage. And I know that is frustrating, but the reality is we've been running inflation that has been higher than the target. Now, maybe Warsh will surprise us and talk about the need to bring interest rates down, but it's a tough thing to do when you have a federal debt that is $40 trillion at this point, and we have inflation that is running 2.5%, 3%, to then say we need to lower interest rates, which would just add more stimulus, which would push up inflation.
Right. So when we get to the end of this week, what would be a good sign that the economy is in a good position? And then what would be a red flag?
Well, I don't think the economy is in a bad position. We do have real GDP that is growing somewhere between 1.5% and 2%. I know it's not as robust as people would like, but it's certainly not terrible by any means. The unemployment rate has stayed relatively low. I think what has unnerved people this week is the intervention of the Treasury into the bond market and their willingness to try to put downward pressure on long-term rates when the market itself is saying that there's good reason that there should be pressure on the upward side. So I don't think anything this week will come out to tell us much more, but certainly before the Fed meets in mid-September, we'll have another jobs report. We've had a very weak last several months in the jobs market. We just had a negative month in July. So if August comes out to be a negative month or even just small positive, then we have a problem in the labor market.
Okay. Dr. Jared Pinson, thank you so much for joining us today. We appreciate it.